Your relationship with money matters. I'm Michelle Perkins, and this is the Money and You podcast, where I will be breaking down your relationship with money, offering tough love money tips, and a money dating plan that will focus on lifting the barriers to success to help pave the way for better money practices and increased wealth. It's time to take control to live a limit-free life. It starts today. Hello, and welcome to another show of Money and You. This is Michelle Perkins. I'm your host, broadcasting from the ubngo.com studios in Burbank, California, and very excited to be here today with a wonderful guest. I'm going to be introducing her in just a minute, but she is a business and cash flow expert, among other things. And so today I wanted to just bring up a couple ideas around cash flow and business growth and getting very close to your numbers. Our guest today, Debi Corrie, is going to help a lot with this whole idea. But as you know, we talk a lot about relationship with money on this show. And one of the big aspects of having a good relationship with money is getting to know and getting kind of intimate with your numbers. And so to have great business growth and have great cash flow, you really need to focus on your money as you would a friend. So your friend can, really pick you up and support you, and they get to know you and they help you. And, you do that by getting to know them, by having a relationship, just like with your money. So sometimes your friends are there to give you good news and tell you wonderful things about what's going on. And that's a great story and that's fun to hear. And that actually endears you to that friend. It makes you want to spend more time. Sometimes we have friends who tell us things that we don't really want to hear, but they're still doing it because they care and they're a friend. And if you look at your money that same way, you've got to look at those numbers and whether they're telling you a great story or whether they're telling you kind of a tough story, you still want to listen because it is your friend and is telling you that story to either prop you up and give you momentum or to actually just help you out and point out something that you need to be aware of and you need to deal with. So I love the idea of thinking of your relationship with money as you would a real relationship, a relationship with a friend, and know those numbers just like you would know a friend and see what the story is and how you can continue to solidify that friendship. So often people are avoiding their numbers. They're leaving it up to somebody else. They're just doing all kinds of things that you would never really do with a friend. And so I'm asking you, business growth and cash flow are so key, and the only ways to really accelerate those two areas is to treat your money in that kind of relationship. So I also love to bring a little bit of news to the program. So before I introduce Debi, she is coming. I have a little article that I read from, I think it was in Time Magazine, the 3 science-backed strategies that can help you achieve your post-pandemic goals. And of course, a lot of this comes down to having a vision and knowing what you want, but then to executing and to actually achieving some of the financial and money goals that we're setting for ourselves and for our businesses. And so with that, I thought this was so interesting because we all have problems actually sticking to our goals and doing what we need to do. It's pretty fundamental. Studies show that we flake on our goals 1/3 to 2/3 of the time. And that is for a number of reasons. And one I thought was really interesting. I mean, obviously we can, things get in our way, things seem more interesting, we can chase some squirrels. But one of the things they brought up is that sometimes we just plain old forget. We don't have our goals in front of us. We forget what our goals are. And so we're busy, we're doing other things, and all of a sudden we remember, oh gosh, that goal. And so I thought that was fascinating because we don't really think about the fact that we might forget our goals. We think about being lazy or just putting it off or being afraid, but we don't think about just forgetting. So I thought that was super interesting. We can get pulled away really easily by things that are more attractive. And so I thought this was also fascinating in the fact that they had some really good ideas for dealing with this. So one thing that they mentioned was looking at how to bundle fun with your goal, which is always an interesting thing to try to do with money, try to make that fun, put the fun in funds. And so they talked about bundling, for example, listening to a podcast while cleaning. Those two, that makes cleaning a whole lot more fun. And, there are a million things like that. So what can we do with money that makes it more fun to work on our money goals and stick to them? Thought that was a great tip. Also, triggering events. So if you can get very specific, you have a what, a where, a how for a money goal. So instead of just saying, I'm going to save more, you say, when this is the triggering event, when I get a raise, I'm going to put X amount of dollars into this account on a weekly basis or whatever it is. So those kind of specifics are super important to helping you with your goals. And the third one was allowing yourself a couple of emergencies. So say you have, I don't know, 10 goals in the day for 30 days. That's a lot. These might all be to-dos. And when you slip up, there's kind of a psychological thing that happens where you start to lose momentum and you kind of think, oh, what the hell? Like this isn't going to work anyway. I'm trying to watch what I eat, and then you eat a piece of pie, and then you just think, what the heck? I'm just going to eat the whole pie. So that what the heck kind of message that your brain tells you, a workaround with that was to actually give yourself a couple of emergency passes. So maybe you have 2 emergency passes in a week where you screw up. Give yourself an emergency pass. And I'm not going to get too into it because I don't want to spend too much time on this, but it was really interesting, the studies that showed how much more effective that was if you give yourself a couple of these emergency passes and let yourself off the hook a couple of times a week, as compared to the people who didn't do that. So anyway, a few quick tips on that. And now I want to get to our wonderful guest, Debi Corrie, so we can talk all about business growth and cash flow with her wonderful insights. So I'm going to spend a minute on Debi's bio. She is the owner and CEO of acumen, a strategic CFO company dedicated to helping business owners increase cash, maximize profits, and scale their businesses. A dedicated and thoughtful business strategist, she owns multiple businesses and is dedicated to helping all business owners achieve financial success. Combining a strong financial acumen with operational expertise, Debi quickly identifies business objectives, forges ambitious development strategies, and transforms challenges into robust growth opportunities. Collaborative and confident in her approach, she creates authentic, inclusive work cultures which drive ownership, accountability, and crucial competitive advantage. Debi received her Bachelor's of Science degree in Business Administration with a major in accounting from the University of St. Louis while working full-time. She's a CPA, a CGMA, and a member of the American Institute of Certified Public Accountants, the National Associations of Tax Professionals, and the Association for Corporate Growth. She's a mentor for Parkway Spark, a past board member for the Professional Women's Alliance of St. Louis, and past board member for Inventors Association of St. Louis. As a member of the National Speakers Association of St. Louis, Debi speaks publicly on a variety of topics and educates her audience on how to intertwine numbers and people for successful business outcomes. I love that, numbers and people. That's so great. So Debi, welcome. So happy to have you here.
And it's great to be here, Michelle. I'm glad to be on the program.
Yeah, thank you. So there is so much to talk about, and you are a wealth of knowledge. We're going to try to compress a lot into a short amount of time. So you also have just written a book called Loving Failure, Getting Control of Your Business Health. And so we're going to talk about your book and what's in there. And so Debi, I read your bio, but let's hear from you a few aspects of yourself that we might not have heard in that formal bio.
Well, I think, part of my love is just business owners. My grandfather, he was a plumber. He served in World War II, was a cook on a Navy ship, got out, apprenticed to be a plumber, had 2 guys working for him, decided to start his own business, and did that until he was 62, and he decided it was time to retire. And when he went to retire, he had a cottage on the lake, he owned his own shop, and he owned his home. Well, when my grandfather grew up, men retired and they died. So my grandfather's retirement plan was, I'm going to be 62, I'm going to retire, live for 3 years, die at 65, live on Social Security. Well, that doesn't sound too bad, right? A couple years on Social Security. The problem was my grandfather didn't file tax returns, and when he did file tax returns, he filed them at a loss. And your Social Security numbers are based on what you file in taxes. So my grandfather hadn't saved for his future. And he lived to be 82 years old. This big, proud, strong man, 82. And by the time he died, he had lost everything he had worked for his entire life. It was devastating to watch. And he didn't know what he didn't know. And that's why I set up my company, AccuMaxim. That's why we help business owners with finances in their future, because no one should end up the way my grandfather did.
Wow.
That's the heart of our business.
Yeah, right. Well, fascinating story. Thank you for sharing that. Yeah, people really need to, understand what happens after retirement on a deeper level like that.
Well, and my grandfather did what a lot of entrepreneurs do. He just folded up shop.
Right.
And he had lots of options. He could have, set up rent at the shop. He could have had those 2 guys still work for him and draw an income. He didn't have to be the one doing it. He could have sold his client list. He could have rented out the cottage on the lake. But because he hadn't surrounded himself with advisors, he had always done everything on his own. He didn't know what those options were. So he was a hardworking man that always worked in his business and never thought about what would happen when tomorrow came. And that's really typical a lot of times of small business owners. They're so busy working in the business, they don't understand what happens when everything it's time to be done.
Right, right. So is that some of what you do in your work with clients to help them understand?
It's exactly what we help clients do. We help them step out of their business, take a look at working on their business rather than in their business. And what does that look like? A lot of what we do is helping them get their lives back. I mean, how many business owners have you talked to, Michelle, where they thought, they could have a very balanced life in business, and because they're constantly working in the business or growing like gangbusters, they don't have the life that they wanted, right? They don't have that team built underneath them, or they don't have the people in place to do the things they want to do.
Right, right.
And so we help with that.
Yeah, wonderful. And I know for some people, I mean, I think that concept, it makes so much sense to me now, but there was a time when I didn't really understand that distinction between in your business and on your business. I'm like, what are you talking about? I'm just working all the time. I'm doing everything I possibly can. So how do you work on your business versus in your business?
So, I set aside time every Monday and I work with my team on Mondays. We have a team meeting. We talk about what's going to happen for the week. One of the things as a business owner that is really hard to do sometimes is realize you don't have to be the one with the best answers. Your employees have great ideas and great answers for you, and they're so integral in the success of your company. It's really important that you engage with them at least once a week and, do multiples. And by that, I mean, there was this great exercise that we did with Alex Mandosian this week about multiples and how strength in numbers can really help you solve problems. And I think that's really important as a business owner, that you understand you don't have to do everything on your own. You don't have to know everything, but you have to have good people surrounding you that can help you solve problems.
Yeah, that's such a difficult lesson to learn, but I think once you learn it, what a relief. And I think most people look at that and say, gosh, I wish I'd done this 10 years ago, So,
right. Yeah. And it's so easy because a lot of times we start off on our own, right? So we had to solve all our own problems, and we had to be the answer person for everything. And then as you grow teams, you have this thing that comes in as people, right?
Yeah.
And now you've got to start managing people and processes and all these things you may or may not have had experience with before. And getting the right people in place is just so critical to the success of your business. I've seen poor players like ruin businesses, and great employees can make them so successful. It's important to nurture those employees. And that's why we talk about numbers and employees together, because employees can make or break a business. It's not just about cash flow either. It's about having employees understand the goals of the business, what you're trying to accomplish, and how they can play the game with you. How do they play to win so that the company's successful and that they're successful? I think that's really a key to those great companies that we've seen that have great cultures and grow their businesses.
Yeah. And that's great. That is so important. And when you're looking at cash flow, how do you make that decision when you feel like there just isn't quite enough cash flow? Or how do you even look at cash flow? I mean, how do you suggest?
That's a great question, because there's so many businesses out there that'll be like, well, Debbie, I only know my accounts receivable, for the next 30 days. How the heck am I supposed to do cash flow for 90 days, right? Well, anything that's successful, you have a plan for. And without goals and a plan, you don't know how much cash you need. So, I always tell owners, start with the basics. What's your payroll, your rent? What are the things that you've got to cover every month? Start with a budget, right? Mm-hmm. Just like you would have a household budget, hopefully, and list out all those expenses. So that's the minimum amount of cash that you need every month, right? Mm-hmm. Then you want to make sure that you set sales goals for your sales team that are reasonable, that they understand they have to achieve, and they know how to do that. So I love talking to business owners about what their goals are for the coming year, and then helping them figure out how to hit those sales goals. Because if you think about it, there's a formula to sales. Everything you do is actually about numbers in a really crazy way. So as a company, how many people you've got to call on before you get a qualified lead, and how many qualified leads do you need before you actually have a sale. Those are like 3 key sales numbers. And the other number that's really important for business owners to understand is, what's their customer retention. And customer retention is all about repeat customers, because the more repeat customers you have, the less work you have to do when you're trying to increase your sales. Mm-hmm. So you don't have to go out and find as many new people. Now, if you're in retail, you might be like, well, Debbie, that doesn't work for me. I'm in retail. And that's just not true. Good retail businesses have clients come over again and again and make purchases. So client retention and the lifetime value of a client, or how long do you have clients for, are 2 really great numbers that you should track in your business and look on a weekly and monthly basis, because that'll really help improve your cash flow once you know what those numbers are, because you have a baseline to go with, and then you can learn how to improve that. But sales, when you set your sales goal, it shouldn't just be a pie in the sky number. You should have somebody on your sales team and your finance person sit down and help you figure out how to execute that goal. How many new sales do you need? How does the price increase affect that new sales goal that you want to hit? And what's the profit margin on that? That is really important, because you can have great sales, but if your profit margin isn't there, you're not going to be able to cover those expenses that we just talked about a little bit ago. Right. And I think that's a miss a lot of times for businesses. Yeah. Mm-hmm. They focus on the very top line for sales, and they forget to look at how much is left over to pay all the bills and expenses after they do those sales. And that's just as important.
Yeah. I think a lot of small business owners are gauging everything based on that, like you say, that top line revenue. And and then I think it's really interesting what you were saying, because if the cash flow isn't what it needs to be, a lot of people will then move over to expenses and try to cut expenses. So again, sort of ignoring sales. I mean, I think sales, people are trying to find, I think, ways around just focusing on sales.
Sales are where all your business grows, and it actually starts sooner than the sale. It's how you price your business. And in my book, we have a whole chapter that talks about price. So the very first thing to figure out what your price needs to be is, we're back to those expenses that you need to cover every month and every year in your business. Your whole price starts right there. Because if you can't cover those with your price that you have with your business, you're never going to have a positive bottom line to create cash flow. Mm-hmm. And so a mistake I see business owners make, especially when they're new, is they don't price their business for when they're going to have employees and a full-fledged business. So what I mean by that is they price their business with just them today, instead of building that $1 million company that they're thinking about in their minds, whatever that 5, 6, 7, 10-year big goal is for them. And that's how the price needs to be set up. So a lot of times what I see business owners do is they try to play what I call the low price game and compete with big box stores. And that's just a mistake, because big box stores can buy in volume. Mm-hmm. And they're always going to beat you on price. Mm-hmm. what you want to sell. Simon Sinek does this great talk, and it's called The Golden Circle, and I would encourage everybody to watch it. We actually have a link in my book, and he talks about how successful companies sell. And it's not about the what and the how. We constantly talk about that, right? We talk about what our company does and how we do it. People buy based on our why. Yeah. You know that story I told at the very beginning of this broadcast? Mm-hmm. That's why people buy from me. It's because of my why. Mm. Think about that for a second. I want you to just stop and think about, what's your why? And when's the last time you thought about it in your business? That is such a powerful story to share with your clients and your potential clients. And that's where you set your price. Mm-hmm. Your price should be about your value.
That's right.
And it's really important that you have your value perceived properly. And a lot of times we get hung up on how we think about our services and what we think people are willing to pay. Mm-hmm. And we start down way too low instead of starting here and what we're actually worth. And that conversation that we have about ourselves with price and money, a lot of times, Michelle, it's how we grew up. You know, maybe we grew up in a family that capped our beliefs about money. I'm sure you've talked about that in your broadcast mm-hmm. before. But when you go to set a price for your business, it's really important that you don't limit yourself with those beliefs, that you really charge a price that's fair for your services. Does that make sense?
It makes total sense, and I love that you brought it up. I also love that Simon Sinek video. Great. I send that to every client because it's just such an important message, and he delivers it so beautifully. But knowing your value can be tricky. I think it's hard for people. I have an exercise I take people through where you identify the results that you bring to your clients and how that helps them in a number of different areas in their personal life and their relationships and all of these different areas. And when you start to really see the expansiveness of the value that you're bringing, and then you attach a price to it, it's quite different often. So I think that was brilliant.
Yeah. And I got to tell you, there's especially in the service area, when you're pricing professional services, mm-hmm. there's this misconception that you should be low.
Yeah.
I won't purchase from the lowest price when I do professional services.
Right. Yeah.
Because I think they don't know what they're doing.
Right. Now, I do that with products and services. And I think people impose their own buying behavior too. And they kind of, they identify with a certain buyer and then they price according to that perception, which doesn't work either because everybody is not the same and people don't necessarily purchase the way you do. So, yeah.
Right. And so you might be, well, Debbie, how do I know when I get my price right? When people start turning you down, then you probably priced yourself a little too high.
I love that.
But if people are accepting and saying, oh, yeah, that's a great value like this, you might be leaving money on the table. I want you to think about that again.
Yeah.
So if you're closing a lot and people are like going, oh, that's a great value. Mm-hmm. Is that what you want to be? A great value?
Yeah. Yeah, exactly. No, that's great. And I love the title of your book because I want to know where that came from, the idea of loving failure. So can you speak a little to that?
I can, because I originally didn't start out to write this book. I started writing this book 2 years ago. It doesn't look anything like the book I started. So what I thought I was going to write about was successful business owners, right? And so I was going to write all these great stories about successful business owners and how that worked. And so I started talking to these business owners, and they talked about how hard it was to be in business, right? That it was hard to be in business, that, these overnight successes that I looked at for people were not overnight successes. There were 10 years of hard grinding till they got to where they were.
Right.
They were constantly out there networking, putting themselves out there. There wasn't luck in anything they had to do. And I want to repeat that. There was no luck involved. These people went out, made the connections, and did the work. That's why they got noticed. Mm-hmm. Luck didn't have anything to do with it. And they had failures along the way. And the more failures they had, the more successful they were. And I found that fascinating.
Mm-hmm.
And the reason for that, there's actually psychology behind that. And it's because we learn the most from our failures, not our successes. And so business owners that were willing to take risks and make decisions and find out if that answer was going to be successful or unsuccessful were the ones that could propel their businesses forward. Business owners that were scared to make a decision and sat in the middle and were indecisive couldn't move and couldn't be successful. So it was totally opposite about what I thought about businesses. And then the pandemic hit. And I thought about my grandfather's story, and there were so many businesses that were suffering. It inspired me to write this book in plain English for business owners so they could follow it and understand some key concepts to be successful financially in their business. And that is what the book's about. It's written for business owners.
That's great. Yeah. And so you had many discussions with people about their successes as a result of these failures. And did any surprise you? You're working with business owners a lot. So were there some surprises in there to you?
There were some surprises, and I think there's, I write about some of them in my first chapter. So the first really big surprise I had was I had a business owner that thought that financial numbers were made up. Literally thought they were made up. And here's why. And once I understood the situation, I could understand why they felt that way. So they would, have their sales, they would get monthly financial reports, but they didn't have the right people in the right seats. So they weren't making sure that the data that was reported every month was correct. So what would happen is their accountant would get all the information at the end of the year and go in and fix the data because there had been mistakes made, and they would have this huge swings in profitability. Wow. And so to the business owner, it felt like it was all made up because their sales should be their sales. And what is all this other stuff that's going on in the background? So it's really important that you have somebody that you can trust do those books on a monthly basis so you know accurate numbers and accurate data that you're looking at to make business decisions. And the people that you have in charge of those numbers, whether they're outside resources or people on your team, you need to know that they know what they're doing because those numbers make big decisions. I mean, think about, how much cash do you have in the bank? You got to have that number right? Mm-hmm. Your expenses that you need to pay, you need to know that. How much did you pay in capital expenditures for the year? Did you buy a lot of big equipment? What happened to your cash? Your numbers tell a story of what happened in your business every month, and that story needs to be accurate. Mm-hmm. So I think that's really important, a big lesson I learned. Another lesson, and it can be a fail for so many businesses, is the 3 top banking myths that business owners believe. So the first myth is that the bank will give you cash when you need it. No, when you are having cash flow problems, bankers need to know that you can pay them back. And so when you're in a cash flow problem, right, you're in a cash crunch, banks are not going to want to lend you money for your business. That's just the way it is. Bankers are actually risk adverse. I want to repeat that. They don't want a lot of risk. They want to know that the loans you take out can be paid back. So banking relationships are really important. So the next mistake I see made by business owners is totally related to this first myth, is they don't go out and get a line of credit because maybe they've got a lot of cash in the bank or they've got really positive cash flow and they don't think they need it.
Right.
Think back to the pandemic and how scary that was, especially if you're a restaurant business or one of the businesses that had to be shut down. There's a lot of owners now that have relooked at that line of credit and are going out and getting lines of credit. Mm-hmm. A line of credit is for when it's a short-term loan that you take out to cover payroll or working capital expenses on a short-term basis. And you have to go out and get those loans when you don't need them. And then the third banking myth is if you get turned down by the bank that you're not bankable and you can't get financed. Banks don't like all types of businesses and all types of loans. There's lots of different kinds of bankers out there. There's investment bankers. There's bankers that want to help people do venture capital. There's traditional bankers. just because you got turned down by one bank doesn't mean that you're not bankable by another financing agency or another bank. So it's really important you have somebody on your team that can help you navigate that.
That's
and I think
great. Yeah.
those three things really came clear during the pandemic, especially when people were so focused on cash.
Absolutely. Yeah, those are great tips, and they are the things that we sometimes wish we'd done when things were better, just like you're saying. So great, great tip to get those things in place for, yeah, maybe you'll never use it. That's great. You never have to.
It's great if you don't have to touch your line of credit. What I tell business owners is bankers only give out so much in loans. So make sure you pull your line just for a couple days every year. Really important, so they don't lower your line of credit.
Yeah. Yeah. Great. Yeah, that's fantastic. What else do you maybe recommend now after the pandemic that maybe wasn't a big focus before the pandemic?
I think finding multiple revenue streams. I mean, that is become super duper clear to a lot of people. And there was a lot of innovation during the pandemic. I don't like the word pivot, but there was a lot of people that were very innovative. I have a friend that's out in Los Angeles that had an in-person dance studio, and everybody did in-person dance lessons. She went online and started doing virtual dance and can now do it all over the United States. Mm-hmm. There is a local pizza parlor here called Katie's Pizzeria. They had 3 very successful restaurants, and we all know what happened to the restaurant industry. Within 90 days, she figured out how to flash freeze her pizzas and send them all over the United States. New multiple business line.
Nice.
Distributor that I work for here locally decided to keep their big PO order in March. They didn't cancel it like a lot of other people did. And they've been able to fulfill orders that their competitors couldn't. So being able to analyze risk and think about things differently, I've been encouraging my clients, what knowledge do you have that you can share with other people that could possibly be an online course or maybe a monthly subscription? Every business has an opportunity to do that. And I think you should really look at lines of revenue that you don't have to be directly involved in. We are in a computer age, right? Mm-hmm. So there's a lot of opportunities out there for people. And I think it's been a great time to be innovative and think about your business differently.
Yeah, I love that. I agree. The multiple revenue streams, and just think back to your grandfather, that would have really been,
he had an opportunity for multiple revenue streams and just didn't understand it.
Well, and in those days, it really wasn't a thing. I mean, I'm noticing with my 20 and 23-year-olds, they're already they're doing it and they're thinking about it in ways that, I never have until now, really. So super interesting the way that's evolved, but excellent advice. So as you were talking, I was thinking there were a lot of people too who sort of froze and either didn't move, but then there were those people who, like you say, were innovative, and then some people who maybe couldn't do things the same way but use that time. I mean, I'm looking around the studio that I'm sitting in and I'm realizing, Tony spent a lot of time improving the studio and, redesigning things and all kinds of things so that when things came back, he was ready to go and actually, able to do some new things. So it was very important for people to not, I think, freeze in the fear of it all, and to be able to move through it with some optimism and some courage and some ideas about the future.
Well, and there's a lot of people that started businesses during the pandemic. Exactly. I was one of them.
Oh, okay.
So, I mean, it's a great time to start a business. You may think, what? Are you crazy?
Mm-hmm. Mm-hmm. Yeah.
Every time we've had an economic downturn, people go out and start new businesses.
That's right.
Kate Spade started her company in an economic downturn, opened a retail store, and look at where the Spade brand is today.
Right.
So, I mean, it requires a lot of vision and a lot of courage when you start a business, and the time period really doesn't matter.
Yeah.
It's all about doing the things you need to do to make it successful.
Yeah, that's right. That's great. So the stories are so interesting. I'd love maybe a couple more of those, and maybe, if you have any sort of case study or story around using your cash flow knowledge and some of the financial, looking at some of the financial information that isn't just your revenue, for example, or even just your P&L.
Well, I mean, I have a whole chapter on the balance sheet, and I call it the black hole called the balance sheet because, most business owners don't understand it, right? They're like, what do I need this report for? There's nothing on here. Well, the balance sheet, just like the profit and loss statement, tells a story. So the balance sheet says, how much cash do you have? It says, how much are you going to collect in the future? What are my accounts receivable? What do I have in company assets that people can touch and feel? What do I have in assets that people can't touch and feel? So, do I have intellectual property that I own? Do I own a percentage of another business that's on my balance sheet? And then a big piece that people miss is the debt portion. What are my current liabilities? What are the vendors I haven't paid yet, or my credit card bills? And more importantly, what loans do I have out? And I want to spend a little time talking about loans because there's this misconception that loans are bad and that you should pay everything in cash. And that's just not true. Think about purchasing a car. You could purchase a car outright for, we'll say, $30,000. That's right out of the bank and out of your cash flow. But say you make a payment that's only $400 a month for that car, multiply that by 12, and it's only cost you $4,800 for the year versus $30,000 right away. And so, there were some people that used to pay everything by cash and made big purchases that way. And now they understand the importance of that cash flow and how cash flow works. So one of the stories I share in my book and I want to share with you is about operating line of credit. We talked a little bit about those banking myths. And one of the clients that I brought on board 2 years ago, we looked at their line of credit, and they had just gotten a big contract with HSN. And they had some big PO outflows that they were going to have to do. So their line of credit wasn't enough. We went out to the bank, talked to them, showed them what the cash flow was going to look like, got the purchase orders done, and financed for that company. Well, there was a hiccup with the product. And what happened was the payments were held up. So without that operating line of credit, the business could have actually shut down because that was a huge vendor that they had. Everything got worked out. They got paid. But what they did with that operating line of credit is allowed them to continue business and work with all their other companies. It was super duper important that we went and got that with the bank. And we had that done in 3 weeks. Wow. Because when I looked at their books, I'm like, you know what, we need to get this done right away. And so we did. And I think that really shows for growing companies, it's critical to have a line of credit because you just never know what's going to happen.
That's right. That's right. Yeah, fantastic. Well, thank you so much. This has been super interesting. Can you let people know how to, and then I'm going to ask you to give us a money tip as well, but can you let people know how they can get in touch with you? How they can find your book, all of the good stuff?
Yeah, so they can get in touch with me at Debi, Debi, at Acumaxum. It's ACUMAXUM.com. Or they can call me at 314-476-4200. My book's on Amazon, and all you have to do is Google my name, Debi Corrie, and it pulls up. And it's available as a ebook, softback, or hardback. And, we're really proud of it. We've given it to our clients and our customers, and it's gotten some really good reviews. It's been really a project of love for me to share this information with business owners.
That's great. Thank you. Yeah, I'm looking very forward to getting the book myself, and it looks terrific. And I love talking to you. Wonderful stories and great advice. So as a last piece of advice, if you had to give, I know there are so many that you could provide, but a great money tip that people could implement this week, if there was something that you could think of that is just super important.
I know they're gonna think I'm crazy, but this is the tip I'm gonna share. Are you ready?
Yeah.
You need to do an annual price increase.
Ooh.
And if you haven't done a price increase in a couple years, you need to do a price increase because your prices go up every year. And when you do it every year, it can be as low as 3 or 4%, and that brings more money to your bottom line. If you have not done a price increase in, like, say 2, 3, 4 years, you are eroding your profits every single year. I want you to think about that, because your costs are going up. Your vendors are raising prices. You're giving payroll increases to your employees. You're doing more things with your business. It's real. That price increase, that small bump, can just do wonders for your bottom line. So price increases are really important. And quite frankly, your customers expect them. They're not going to come back and say, hey, Larry, you haven't given me a price increase this year. What's it going to be? You've got to go out and get it.
Wow, that was a surprise and great money tip. I love that. That's not, I wasn't anticipating that, but what a good one. And you're so right. So do you suggest people raise their prices every year, or is there any kind of formula?
So there is a formula. So when you raise your prices on your items that are most in demand, nobody blinks an eye. On that slow moving, whatever it is that's slow moving for you, you're not going to want to raise the price. You might want to consider actually cutting the price to get rid of it, because it's taking up space on your shelves, and you want to make room for product that moves. You've already spent the cash. If it's been sitting there for a while, you want to turn it into money.
Love that. Okay. Well, that's a beautiful way to wrap up. So thank you so much. This has been great. And I so appreciate you coming on and talking to us and providing these great stories and great tips. So I would encourage everyone listening to read the book so you can get more of this, and to connect with Debi if you can use business growth and cash flow advice and also, more of the goodness that she's been delivering here today. So thank you so much.
Thank you, Michelle, for having me on. It's been so much fun.
Yeah, I loved it. So, okay. Well, thank you, audience, for being here. And I would love to invite you to also go to limitfreelife.com, check out some free resources on my site, ways to connect with me. And you can find me on Facebook. You'll be able to find the podcast on all the podcast platforms and on the Limit Free Life YouTube channel, Limit Free Life Facebook page. And so please subscribe if you like episodes like this, so you can see them every week and get a money tip every week. And we are also streaming live at 7 o'clock p.m. on ubngo.com, where a lot of wonderful shows reside. So check out that as well. Thank you for being here, and make sure that you are taking some time with your money each week. That's part of the key here, paying attention to it, because it's a relationship you have and a relationship that you should value. And to do that, you need to spend a little time, put some attention on it. So thanks so much for being here. We'll see you next time on Money and You. Your relationship with money matters. I'm Michelle Perkins, and this is the Money and You podcast, where I will be breaking down your relationship with money, offering tough love money tips, and a money dating plan that will focus on lifting the barriers to success to help pave the way for better money practices and increased wealth. It's time to take control to live a limit-free life. It starts today. Hello, and welcome to another show of Money and You. This is Michelle Perkins. I'm your host, broadcasting from the ubngo.com studios in Burbank, California, and very excited to be here today with a wonderful guest. I'm going to be introducing her in just a minute, but she is a business and cash flow expert, among other things. And so today I wanted to just bring up a couple ideas around cash flow and business growth, and getting very close to your numbers. Our guest today, Debi Corrie, is going to help a lot with this whole idea. But as you know, we talk a lot about relationship with money on this show. And one of the big aspects of having a good relationship with money is getting to know and getting kind of intimate with your numbers. And so to have great business growth and have great cash flow, you really need to to focus on your money as you would a friend. So your friend can, really pick you up and support you, and they get to know you and they help you. And, you do that by getting to know them, by having a relationship, just like with your money. So sometimes your friends are there to give you good news and tell you wonderful things about what's going on. And that's a great story and that's fun to hear. And that actually endears you to that friend. It makes you want to spend more time. Sometimes we have friends who tell us things that we don't really want to hear, but they're still doing it because they care and they're a friend. And if you look at your money that same way, you've got to look at those numbers and whether they're telling you a great story or whether they're telling you kind of a tough story, you still want to listen because it is your friend and it's telling you that story to either prop you up and give you momentum or to actually just help you out and point out something that you need to be aware of and you need to deal with. So I love the idea of thinking of your relationship with money as you would a real relationship, a relationship with a friend, and know those numbers just like you would know a friend and see what the story is and how you can continue to solidify that friendship. So often people are avoiding their numbers. They're leaving it up to somebody else. They're just doing all kinds of things that you would never really do with a friend. And so I'm asking you, business growth and cash flow are so key, and the only ways to really accelerate those two areas is to treat your money in that kind of relationship. So I also love to bring a little bit of news to the program. So before I introduce Debbie, she is coming. I have a little article that I read from, I think it was in Time Magazine, the 3 science-backed strategies that can help you achieve your post-pandemic goals. And of course, a lot of this comes down to having a vision and knowing what you want, but then to executing and to actually achieving some of the financial and money goals that we're setting for ourselves and for our businesses. And so with that, I thought this was so interesting because we all have problems actually sticking to our goals and doing what we need to do. It's pretty fundamental. Studies show that we flake on our goals 1/3 to 2/3 of the time. And that is for a number of reasons. And one I thought was really interesting. I mean, obviously we can, things get in our way, things seem more interesting, we can chase some squirrels. But one of the things they brought up is that sometimes we just plain old forget. We don't have our goals in front of us. We forget what our goals are. And so we're busy, we're doing other things, and all of a sudden we remember, oh gosh, that goal. And so I thought that was fascinating because we don't really think about the fact that we might forget our goals. We think about being lazy or just putting it off or being afraid, but we don't think about just forgetting. So I thought that was super interesting. We can get pulled away really easily by things that are more attractive. And so I thought this was also fascinating in the fact that they had some really good ideas for dealing with this. So one thing that they mentioned was looking at how to bundle fun with your goal, which is always an interesting thing to try to do with money, try to make that fun, put the fun in funds. And so they talked about bundling, for example, listening to a podcast while cleaning. Those two, that makes cleaning a whole lot more fun. And, there are a million things like that. So what can we do with money that makes it more fun to work on our money goals and stick to them? Thought that was a great tip. Also, triggering events. So if you can get very specific, you have a what, a where, a how for a money goal. So instead of just saying, I'm going to save more, you say, when this is the triggering event, when I get a raise, I'm going to put X amount of dollars into this account on a weekly basis or whatever it is. So those kind of specifics are super important to helping you with your goals. And the third one was allowing yourself a couple of emergencies. So say you have, 10 goals in the day for 30 days. That's a lot. These might all be to-dos. And